Following on from the previous video where I taught you what price action is and why you need to know price action, let's build on that. I'm now going to move on to price direction or market direction. Let's jump right in. This is all part of my free technical analysis series. Markets have direction. Prices change. If they didn't, there would be no point trading that market. You need the euro to appreciate or depreciate. You need the US dollar to change price in order to make money from it. You need to buy at a particular price, hopefully sell at a higher price in order to make money. If prices didn't change, if markets didn't have direction, there would be no money making opportunities, so there'd be no point having the market. Prices can move up, down, or even sideways. And we're going to cover the first two in this video: how markets behave, what the price action looks like, how price acts when it moves up, when it moves down, and in the next video we'll move into sideways markets, how price looks when it's moving sideways. Market direction, predictive market direction, really has to do with historic prices, historical price when it comes to technical analysis. So you need to look at historical prices in order to gauge which direction price is currently moving. Is it moving up? Is it moving down? Is it moving sideways? Now, because we're starting to get quite technical in this course, we're going to be looking at lots of charts. And I have a chart here, and we're going to start off by looking at uptrends. But the first thing to mention is when we look at these price charts, this is a price chart of euro US dollar. You don't need to read the small writing, it's not important. In the next slide, this chart will get a lot bigger, but it's still not important to be able to read the writing. Just listen to me and follow what I'm trying to teach you. When we look at these charts, we have one axis, which is for the price, which is the y-axis here on the right. And then down the bottom here, the x-axis, we have the date or the time. Generally it's the date, but if you're looking at very small time frames, don't worry about the terminology there, then it will be about time rather than date. So your date and time down the bottom and price on the right. And you can see here on my line chart, the price over time from day to day is changing. Okay, so we're going to look at uptrends to start off with. So when price moves up, when price is moving up, it can be referred to as a number of different things. Some people, some traders, investors, economists may say the market is bullish. So bullish means prices are moving up. Other people like myself will say price is uptrending. That's the terminology I use most frequently. Price is uptrending. Some people may say it's moving to the upside. You may hear the term higher highs or even long. So you may hear a trader say, I'm going to go long. That means they're anticipating a bullish move, a move higher on a particular currency pair, stock, commodity, etc. So with uptrends, here's that same chart again, but much bigger. With uptrends, we can see here that over a period of time, so from the start of the chart to the left here, to the right, over a period of time, price has moved higher. It has been uptrending. It has been bullish. Now what you'll notice is that price wasn't here and then the next day up here. That's not how markets behave. When price uptrends, when it has bullish direction, it generally has like a wave, has like a waving motion. So even though we're moving in a general upward direction, it's not we're here one day, the next day we're all the way up here. And that's the uptrend over. Price takes its time. Buyers take their time. Investors take their time. Traders take their time to enter the market. And it creates these waves. So what we tend to have, even though price is bullish, we have like these waves over time in a general upward direction. Now another way to look at this, to look at these waves, is by marking the peaks or the highs of these waves. So if we look at these waves again, so we have a wave up, a wave down, a wave up, a wave down. Every time we form these peaks or new highs or swing highs, these highs are higher. And that's one of the main characteristics of an uptrend, is that every time price peaks, when it starts to come back down again, it's higher than the previous peak. So if we look at these peaks, each time price forms one of these peaks, they're higher than the previous peaks. This is referred to as higher highs, higher swing highs, prices forming new highs. This is the main characteristic of an uptrend. Higher highs. Each time we peak, each time we rally up, we are higher than the previous rally. It's the same with these troughs. So if we were to look at these troughs, so we have peaks and troughs. Each time we look at these troughs, they're also higher. And that's shown on the next slide here. So each of these troughs are generally higher than the previous trough. So we have this series of higher highs and higher lows, or higher peaks and higher troughs, or higher swing highs and higher swing lows. There's lots of terminology to explain the same thing, but the main characteristic of an uptrend is a series of peaks and troughs, highs and lows that continually to get higher and higher, continually get higher and higher. So we have high, high, high. They're getting higher and higher each time these peaks are climbing. Some people refer to this as like this stair motion. We have stairs, we're moving up the stairs. That's the basic principle, the basic concept. That's the basics when it comes to price action of an uptrend. When price is uptrending, we have these peaks and troughs that move higher and higher. So let's look at a downtrend. So we move on to a downtrend here. Once again, we have this general downward direction. So price was up here and is now down here. Once again, we have the price to the right and the date down the bottom here. Once again, price wasn't here, and then suddenly within a split second was down here. It took its time. This is Euro US dollar. It took its time to decline. So we were at 110.23. We're now at 106.11. In order to make that move down, it took about a month. And as it came down, once again we have this wave motion. So we have a wave down or a swing down, wave up, swing up. Have like these waves or steps. Something like this. It doesn't have to be an exact science. These waves, these steps down. Once again we have peaks and we have troughs. Let's move on to the next one. Here are the main peaks. With a downtrend, these peaks are lower each time. So with an uptrend, the peaks are higher, the swing highs are higher. With a downtrend, the swing highs are lower, the peaks are lower. Same with the troughs, the swing lows are higher. So with a downtrend, you have these lower lows and lower highs, lower troughs, lower peaks. With an uptrend, you have higher highs, higher lows. That's the basics of an uptrend, the basics of a downtrend. Obviously this takes time to truly understand. What I suggest you do is have a look at these trends for yourself. If you have a trading platform, have a look at the charts. You should be able to spot these waving motions and how they can move higher or how they can move lower and form uptrends and downtrends. If you need a platform, I'll put a link in the description below where you can download a platform for free. Alternatively, if you're watching this on my website, which is the best place to watch it, I'll put a link there. That's the best place to put a link. and you can have a look at these waves absolutely for free. You might be jumping the gun, feel free to just carry on watching this series and try the trading platform later. There will be a course about opening a platform and stuff like that, so you might want to wait till then, because I can give you some guidance on that. That is the basics though. Thank you so much for watching. Let's carry on this series in the next video. In the next part of this series, we'll look at sideways markets. So we've looked at uptrends or downtrends, and we'll move on to sideways. Now, something I didn't mention is, when price is downtrending, there is different terminology, just like there is uptrends. So with uptrends, with this bullish, uptrending, upside, higher highs, long. These are the terms that can be used to describe an uptrend, a bullish move. It's the same with downtrends. So with downtrends, instead of bullish, you're bearish. Or downtrending, downside, lower lows, short. So it's the opposite. So downtrends, bearish, downtrending, downside, lower lows, short. Complete opposite of an uptrend, which is what a downtrend is. It is the opposite of an uptrend. Thank you for watching, and I'll speak to you in the next video.